Frequency Podcast Network. Stories that matter, podcasts that resonate.
The Bank of Canada has opted to leave interest rates unchanged for a fourth straight meeting. At the same time, it also warned that things could change if the price for oil continues to move higher with an eye on inflation. Now, that doesn't exactly bode well for the spring housing market, which has already been slow. So where do we go from here on real estate? I'm Kris McCusker, and in this episode of In This Economy, we speak to David-Alexandre Brassard, the chief economist at the Chartered Professional Accountants of Canada. Thanks for doing this. So, can you offer some insight, just maybe for people who don't understand, the housing market and the role that it plays on Canada's economy? Because when the housing market is weak, that's problematic, correct?
Yes, it is. Weak in the sense that there's low transactions. To me, it is problematic because it's limiting Canadians' mobility. And the weakness is not necessarily prices not increasing. If I have to be precise about it.
Okay, so having said that, we are seeing Canada's housing market, as it was described by the Canadian Real Estate Association, has just seen its weakest quarter in 3 years, with home sales down nearly 10% compared to the previous period. So what does that mean from your perspective?
Well, the backsplash of this quarter is weaker demographics. The Canada's housing market has always been propped up by our population growing, which stimulates demand. So that's something that's being taken out of the equation in 2026 and most likely 2027, or at least population could stay flat. So that's what's behind the housing market not doing as good as expected. And let's also remind ourselves that there are multiple different housing markets in Canada, and they do not necessarily behave the same way, although they've tended to normalize in 2025. To put it a bit more clearer, Toronto and Vancouver have not seen price increases since March or April 2022 overall. But other housing markets were doing better. But as price increased, affordability ratios, which is when you compare the price to the income, have all gone up. So in 2025, we saw most Canadian housing markets also stop to have price increases. I think the outliers are the province of Quebec and some maritime provinces. So there's a bit of a normalizing of housing market, and it's because they've become less affordable. They're not yet hitting Toronto and Vancouver levels, to be honest, but that's the trend that we're seeing in Canada.
Yeah, I mean, to put it another way, you don't buy a Canada house. You buy a house in a market in Canada, and when we look at sort of overall housing market stats, it's an average.
Exactly. And Toronto and Vancouver, especially Toronto, have an outsized impact on the average because there's a lot of people and prices are very high.
Fair enough. All right. With that as sort of the setting that we're looking at here, why do you think we have seen the weakest quarter in 3 years in Canada's housing market?
So as I said, the backsplash of weaker demographics is the big thing. And if you put that, so in other words, demand is not stimulated by new people arriving and putting more pressure on housing. And if you put that side by side with affordability, which is still an issue in many of our housing markets, if you don't have those newcomers pushing on demand and affordability is already an issue, you've got the perfect mix that's bound to have a market that's a bit more stable. And maybe to expand, let's remind ourselves that we've got a generation of baby boomers who, for a lot of them, housing is paid off. So there's no in our survey, what did not surprise me, but I wanted to dig into was we only have 20% of people who are 55 and above who intend to downsize. So downsizing is not a trend that we're seeing across the baby boomers. So if you've got prices that are not increasing, there really is no pressing issues for them to sell. And And if you've got a buyer that's facing affordability issues and you don't have more buyers because of that population backsplash, you get sort of a perfect mix where there's a low level of transaction. And I think that's what we've seen taking place.
Okay, so less immigration, I guess, is part of the story. But I mean, we live in very uncertain times right now with a number of things going on.
You're right to point that out, Kris. However, when you look at housing, there's the things that you look at are the number of sales, but we also look at the number of listing, and we haven't seen the same drop in the number of listing. In other words, people are still looking to sell their house, which if you think of it if you think of uncertainty as a paralyzer, you'd have less people selling their house, and it's not really taking place that much. So there's still a desire for housing to be sold. It's really that the transaction is not happening as much. But you're right to point out that uncertainty is going to have an impact generally on the market.
Yeah, I mean, like there's the CUSMA negotiations that have sort of been in and out of the spotlight. And I mean, let's face it, it's not sounding overly promising. But then you also throw in the war in Iran and what that's done to oil prices, which has further exacerbated affordability concerns. It feels a little like those things could be holding buyers back, but maybe I'm wrong?
No, I think you're right in the sense that it's holding buyers back, but sellers still want to sell. That's where I was getting at. We still got people wanting to sell. It's just that the transaction is not happening. And as you said, the buyers, they're doing the most important financial transaction of their life, buying their home. So it's understandable that many of them can stay on the sidelines. Maybe one other element, Kris, to dig into, to me, the buyer in 2026 is not the same buyer as in 2021, or maybe across all of our history. There hasn't been a 4-year period in which prices have not increased or have decreased. So that that buyer, that potential buyer, is also looking into what the financial markets are doing, and maybe rethinking about, like, is it time to enter now in the housing market? So there might be some of that in the equation. Although when we surveyed Canadians, we still noted that we have 90% of respondents who either own a home or want to buy one. So that wanting a house is still very real, but the question of the timing regarding, again, the performance of the housing market versus financial markets might be something that plays into the equation as well.
Is there also a possibility that adding to the number of listings is because, as you outlined, the housing market is very different now than it was in 2021, and maybe some mortgages are coming up for renewal, and that's problematic too?
It's part of the equation for sure. When I look at mortgage delinquencies, which is when mortgages are late, so that's a statistic that's captured. It has been worsening in the last few years, and we've gotten back to pre-pandemic level. And when you break down the statistics per province, Ontario is really the province in which it has worsened the most. In other words, there is a fragility in the homeowner in Ontario that's a bit heavier than in the rest of the country, and it's understandable. As I said, affordability ratios are a bit more problematic in the province. In other words, if you're a homeowner in Ontario, and especially in Toronto, more of your wealth, more of your costs are tied to your house. And as you said, interest rates moving and renewal coming up. If you're renewing at a higher rate, that's bound to put pressure on you. And there's let's say, a bigger fragility than what we've seen since the pandemic.
It feels a little like it's almost unsustainable. So, I mean, where does this go from here? I don't know if your crystal ball is working, but it feels like, something's got to give at some point.
So I push back on the challenge with real estate is that a lot of people that comment on it or that are providers of data have a vested interest. Like a lot of the data comes from Realtors Association who have an interest into saying that the market's doing good. Whatever, if your listeners are curious, have a look at what the Canadian Realtor Association publishes and how positive of a spin they're trying to put on the numbers that are not looking great. So to me, there's no sign of a reversal until the CUSMA renewal this summer or late summer. The demographics are not there. Uncertainty is still very much there, and rates, variables, they're moving with the policy rate. The policy rate is flat and is going to stay flat for the year. And fixed mortgages, they're not better than they were a few months ago because uncertainty plays a bit of a role into the 5-year fixed mortgages. So to me, I see it being flat. No sense of a reversal. However, I'd like to state that I think the situation that we were in 2022, 2021 was more unsustainable than the one we are in now. And I'll explain myself. Prices increasing at that pace were not helping anyone. And if you think about it from an economic perspective, really expensive housing is only beneficial if you're at the end of your life and you want to downsize. Because if you're selling your house, you need to find somewhere else to live. So high housing prices are not, and they're making you captive geographically, which is not something we want. Like some of our, I saw an interesting text. Toronto has had limiting growth because of real estate, just of how zoning works. And how hard it's been to develop housing in Toronto, but the best jobs are in Toronto. So you would want that city to grow as big as possible. But if housing is really expensive and there's limits to how you can build, that's slowing down productivity in Canada. So that's why I push back on the unsustainability. I think that the housing market was due for a correction, and we're in that correction. It's not pleasant. I won't sugarcoat it, but maybe something that was needed.
It's an interesting take. Can you offer hope to people who are looking to sell?
Yes, depending on so we talked about housing markets being different geographically. Housing products are different. A condo is not the same as a single family home. When we surveyed people around what they want in housing, the people that want to buy, they want to buy a detached home, a townhouse. The condo is not particularly popular. So two things. So for me, there's less hope on the condo side in terms of prices stop decreasing and it getting better. But on the single family side, that product is still very much in demand. And if you look at what we're building, so the new housing that we're adding in Canada, it's less than a third of it is townhouse, single-family homes or semi-detached homes. Meanwhile, that if you look at the early 2000s, 50 to 55% of what we were building were those kinds of homes. So that single-family detached home townhouse is still going to be a popular product, and it could. So the prices could flatten faster for that type of product than the condos in my assessment of the market.
What about people looking to buy? Like, I keep hearing a lot about something known as like a living will, where parents are gifting money to their kids to enjoy it now, so to speak.
Yes, one of the things that we noticed when we surveyed people is we have 60% of our respondents who reported some sort of financial aid into accessing home ownership. And for 30% of our respondents, they received $50,000 or more. So with the average wage and savings rate, you're looking at 7 or 8 years of saving and invested. So that's something that is surely taking place. What I like to say in that discussion around how to help the next generation, money is a tool. The more assets, the more wealth you got, the more you can use those tools. So that's a reality of the market as well.
Well, and that's something that wasn't a thing for previous generations, but buying a home nowadays is also very different than it was for previous generations.
For sure. If you look at so we're in a two wage economy for a household. That's more true in 2026 than it's been in all times. If if you're sharing your housing costs with someone else, whether that be your partner, a friend, or someone in your family, you're twice more likely to be a homeowner. So that's a reality that we now must be faced with. But one of the things that we found was really interesting is when we surveyed people around access to homeownership and how different it was, almost half of our respondents said recognize the fact that it's harder than it's been in the past, and it spanned across Canada and across different generation, and even stronger than that, Kris. We had a quarter of our respondent who outright said that real estate, in their opinion, was overpriced. And if you look at the homeowners, that's what they stated. For 20% of them stated that real estate was overpriced. So there's really, again, there's a vision that's changing around housing and how expensive it is.
The other thing I'm interested in your take on, we hear a lot from government about, building homes and affordable housing and shovels in the ground, and, adding to supply could help bring prices down. Do you see that as, this is something that's been talked about for decades. Do you see that, A, as something that happens, and B, as something that could, make housing slightly more affordable?
So adding supply, or at least, so there's, okay, I'll make it clearer. There's two sides of the equation. You alluded to the supply side, which is building more. And I talked earlier about the demand side, which is the need for people to have a house. The market that we're in right now, as I said, that demand component is not there. There's no population growth. So there's no need for new housing per se. Doesn't mean that there's not pent-up demand. That's a whole other thing that I don't think it's worth getting into for this question. But right now, supply is overtaking demand. So we're still building housing, not as much as 2 years ago, because again, prices not increasing is not helping construction. But right now is not a good timing to bring incentive for more construction, because as I said, that demand is not there right now. That whole thinking around let's boost supply was very true between mid 2022 to mid 2024, when that demand was overtaking supply significantly. But I think whenever we talk about government incentives or government getting involved, first off, is the government needed, and what are going to be the impacts? So I'm going to push back right now on if the government is needed in terms of building more homes. I don't think they are. I think they are needed on the affordable home side, where you need government support to build that kind of housing. On that part, makes total sense in my mind. But supporting the building of new condos, probably not needed right now. And I'd go further than that, Kris, and think about so the government has done a lot of things on the demand side as well in the last few years. So you've got the savings account for first home buyers. You've got some stuff that they're doing on the GST or HST, depending on how you want to name it. I don't think it's the government's role right now to boost housing demand in order to stop the market from correcting. Because things don't work in a vacuum. So if you're giving money to first home buyers, where does that money end up? It ends up in the pocket of people who sell their homes. So we need to always think about that whenever, and that's the problem that I have with government policy seen in a vacuum. And Quebec has just done that. They're planning to reduce the transfer tax when you buy houses for first-time home buyers, but the housing market in Quebec is doing very good. There's no need to stimulate demand. And again, that money is not staying in the pocket of first home buyers. Like it's getting priced into the price of the home that they're going to buy, especially in those. So in Quebec, the Montreal market is the weakest one. The regional ones are still doing very good. And there's even like the prices are going, houses are being sold over asking. So if you have that dynamic in your market and you're reducing transfer tax, it's just going to translate to a higher price. So I think, again, government really needs to think about what their role is in the housing market and where the housing market is currently to determine if they should act.
So interesting. Thank you so much for doing this. I really appreciate you giving us your time and your insight into this very interesting and ever-changing issue.
Well, thanks for the exposure, Kris.
David-Alexandre Brassard is the chief economist at the Chartered Professional Accountants of Canada. And that wraps up another episode of In This Economy. You can listen to previous episodes on the Seeker app. Please like, review, and share. I'm Kris McCusker. Thanks for listening.